Hello friends, let's look into Ashok Leyland Ltd, one of India's leaders in trucks, buses and commercial vehicles and a company that really rides on India's economy. Let's start with sales. 10 years ago, Ashok Leyland had sales of 11,859 crores. This year, sales jumped to 49,547 crores. That is a strong 10% average growth per year over the decade. The last 5 years look even hotter, with 15% annual growth, and the latest 3 years saw a blazing 17% growth each year. But here is the key. Those numbers bounces a lot. Sales jump in trucking booms and drop in slowdowns. This is the definition of a cyclical growth company, tied closely to India's infrastructure and freight demand. Expenses climbed from 11,437 crores to 40,007 crores this year. Material costs like steel, parts, engines are the lion's share, 66 to 17% of spending. Employee costs are 8 to 12%, while other costs are about 9 to 14%. Expenses are well managed, but because input cost can move a lot, margins are never smooth. Operating profit went from 422 crores to a whooping 9,540 crores this year. The operating margin is now 19%, which is excellent for a mass manufacturer. Margins were as low as 4% 10 years back, jumping in strong years when demand surged. Other income was 445 crores. This includes things like investment returns and asset sales. Helpful, but not the main show. Interest is high, 4,138 crores, due to borrowing for working capital and expansion. Depreciation is also high at 1,125 crores, as plants and vehicles are expensive and wear over time. Let's look into net profit. Net profit was negative a decade ago, loss of 222 crores. It's bounced along with cycles but hit 3,490 crores this year, 20% compound growth for 10 years. The last 3 years saw profits skyrocketed, 284% per year, as the Indian economy and transport sector rebounded hard from COVID. Earnings per share turned from negative 0.31 rupees 10 years ago to 5.46 rupees this year, a big turnaround for investors. Return on equity is 28.8%. Return on capital employed is 14.3%. Very healthy for an auto business. Dividend payout has bounced from 0% in tough years to 59% of profits recently. Current yield is 2.39%, which is solid for a capital goods company. So, growth for Ashok Leyland is highly cyclical. Massive growth during booms, deep slowdowns in tough times. It's not a steady grower, but a company for investors who like riding the big India growth cycles. So, overall, Ashok Leyland offers big growth when India's economy is rolling and infra spending is strong, but can get battered in downturns. If you want an auto stock that tracks the ups and downs of the economy and can handle a bumpy ride, Ashok Leyland is a classic cyclical story. If you found this analysis easy and helpful, subscribe to Wealth Growth Club and let me know which company to do next.